the partnership that we have with Cordaid right now, discussion started in 2020, and the timing was just right and necessary, for this kind of innovative partnership. And through the Trade Hub, we tapped into using our funds through the Trade Hub. We also tapped into other US government resources like the DFC's guarantees to make this partnership happen. And we provided 2 million of our grants and the COVID grants and as a first loss guarantee first loss capital. And this made the DFC, US Development Finance Corporation, comfortable to provide a loan guarantee as well, to top it up with a loan guarantee that to support the fund that Cordaid set up. And through this, this partnership was able to attract other financing from other different resources, private resources that I believe Cordaid will explain better in the course of the webinar. So with the 2 million grants under COVID, this allowed Cordaid to invest in SMEs that employ sizably in the region, and also invest in microfinance institutions which invest in farmers and micro businesses in sectors as agriculture, clean energy, waste management, among others. Through this partnership, we've been able to attain some key development impacts that we couldn't have done using the $2 million investment that we put into the activity. So some of the high level impacts that has been achieved so far include promoting international private investment in sustainable, inclusive businesses operating in fragile and frail countries that I mentioned, Burkina Faso, Mali, Sierra Leone. With the 2 million first loss guarantee, other investors or potential partners got comfortable. They gained more confidence to invest in the Cordaid West Africa Bright Future Fund. And another impact that has been attained is creating new jobs through lending to SMEs. We have been able to create new jobs for the youth, especially in these fragile states. As we are aware, West Africa is booming with young people. The population is very young. So this partnership has allowed us to be able to create jobs for this new population that's growing. And as of March 2022, over 513 jobs have been created, and a lot of them go to the youth. Another development impact that has been attained through this partnership is promoting food security and nutrition in the region through agriculture development, because a lot of the lending goes to agribusinesses and also farmers through the microfinance institution, and value addition as well. So value addition of these food crops that help boost nutrition in the region. As of March 2022, over 15,600 people have had the opportunity to participate in food security initiatives as a result of this partnership. And also another impact that we have attained is to promote trade and expand global value chains, like exports of mangoes from Mali. So this funding has helped, Cordaid has been able to help secure global supply chains, develop and secure global supply chains in the region. Also, we've been able to support climate smart initiatives through this partnership. So some of the businesses that have benefited from this fund are clean energy businesses, and some also are businesses that are involved in waste management. So this has helped to support climate smart initiatives in the region. And in all this, we've seen that this kind of innovative financing does not only help sustain businesses in the region with our funding, but it helps grow the funds that Cordaid would have otherwise spent a lot of time to grow. But with the first loss guarantee, more confidence is built with private sector investors who have bought into it and then have grown the funds pretty quickly and benefited a lot of the populations in the fragile states. And I believe in the course of the presentation, Cordaid would be able to dive deeper into how the fund started and exactly who the partners are. Thank you.
Thank you, Kathy, for that presentation. In fact, just to echo what Kathy was mentioning, we listened to Cordaid's pain point about launching their maiden fund in West Africa. And at that time, because of COVID-19, as Kathy alluded to, there was a lack of liquidity for many of their investees. So we structured the grant as an investable first loss grant, which has two components to it. The investability aspect of it, i.e. to provide liquidity immediately to the SMEs to ensure that they maintain their workforce, as well as the first loss component to it, which is also to protect future investors in the fund so that they can invest in such a high risk environment. And that was also done in partnership with DFC. With that, I'd like to introduce the Cordaid team to better talk about their operations. Shord and Miriam, and I'm sorry, Han. Shord, please, thank you.
Thank you, Charles. Thank you, Kafui, for the introduction, and we really appreciate the partnership that we have installed with you, because we think that that partnership is key to be able to sustainably invest in these fragile states. My name is Sjoerd Melset. I joined Cordaid a couple of months ago, but have an extensive experience over the past 15 years in financing SME companies in the African environment, and have lived myself also for a couple of years in a fragile state in Southern Africa. Finance in fragile state comes with quite some challenges, and these challenges are of course mentioned here on the slide. Insecurity, businesses and communities in fragile markets have often very poor institutions, weak infrastructure, and infrastructure is not only the ports and roads and etc., but also level of education is often lower, so that makes it difficult to employ people, to have the right set for skills for the businesses, and also making it also the access lack of access to electricity also hampers really new businesses, etc. Another issue is the financial sector in these fragile states. They are often underdeveloped, and access to finance for SMEs or small entrepreneurs is very difficult. And if there are financial institutions, they often ask for a lot of collateral, a lot of requirements, which most of the time these smaller SMEs are not able to provide them with. Another challenge, of course, is the gender inequality, as mentioned, as well as youth unemployment. Women are often excluded from financial markets and as a consequence, limited in their economic and social potential. And especially in these fragile and conflict-affected states, They could provide stability that could be a foundation for long-term sustainable development. So it's really important to overcome this challenge. It's a bit the same for youth unemployment. With a lot of unemployment among youth, there could be a huge instability in the environment of the business. And last but not least, challenge climate change. Fragile communities are the most affected when it gets to climate change, as they have fewer resources to protect themselves and have more difficulty to recover from disasters. Especially the agricultural sector, we see that there's a lot of effect in West Africa in general, droughts or an overflow of rainfall that caused by climate change that have a severe effect on the livelihoods of the communities. If we look at the outputs of blended finance, then I think it's very important to mention creating secure and stable jobs for both women and youth, as mentioned, for the stability in a society. Financially sustainable business, how to develop them, very crucial, as well as access to renewable energy and other forms of electricity, and access to finance. We are trying with blended finance, we're trying to create a sustainable business environment in, I would say, the most difficult circumstances. If you compare that to middle income countries or more developed countries, then this is really a huge challenge. So blended finance is, to us, really one of the solutions, or the major solution to overcome these challenges, and to be able to have the outreach and the output and the impact that we want to have. First loss, regular equity. Can you just go back? Portfolio guarantee and technical assistance, very crucial as well, because the lack of education, or the level of education, is often too low. So we need to have technical assistance on the blended finance part as well. It's clear that these challenges need to be addressed in partnership, and with the partnership we created, we think that we can overcome these challenges and have at least a very, very huge impact. Next slide, please. So how do we do this? How we set up? We set up a fund of 27 million. It's a closed-end fund, financing in 4 countries: Mali, Burkina, Sierra Leone, and Guinea, and focusing on the mainly 3 sectors: clean energy, waste management, and agriculture. And I need also to stress out that with agriculture, we really focus also on the local value chain, where a lot of other impact investors are financing the more tight and the cash crops, so the cocoa and the coffee, etc. We try to focus very much on the local value chains, on staple foods, and really to have added value on the food nutrition. One of the themes that we want to reach, the impact that we want to have, food security, nutrition, to be able to reach that, and this is really a distinguishing factor of the West Africa Bright Future Fund that we installed. And of course, women empowerment, youth employment, to address those issues, climate change, and access to finance. As SME finance, because we focus mainly on SMEs, is very labor intensive. Origination of deals, doing due diligence, monitoring. Once you've disbursed, the monitoring is very intense as well. You need to be on top of it, not to lose momentum, and to really make sure that the loans are repaid. It's extremely important to have to be close to this company that we invest in. And Cordaid, I can say, is in the 4 countries that we invest in. In 3 of these countries, we have local presence, which makes it for us very important, and it's crucial to be close to your clients and be able to monitor these companies. Next slide, please. So how is it structured? Already briefly mentioned. USAID West Africa Trade Hub, Trade Investment Hub. The Trade Hub has put in a substantial amount of money on the committed first loss. And besides the National Postcode Lottery and some private donations, we have 3 million of the 27 million that is first loss of the total investments. Then DFC has provided a cover on the portfolio investments that we do, the loans that we provide, 50% is covered. And with that, we hope to target a 1% return on the debt providers to the fund and 2.5 to the equity providers. But I think much more important is that de-risking is really crucial. The way how we structured it here is really crucial to be able to attract private investors as well to such a fund. And I think the major return will be the impact that we have and the job creation, as mentioned before as well. Next slide, please. The fund is offering capital or debt. We finance by debt only. We do that in max tenors of 5 years and ticket sizes or loan sizes between 500,000 and 2 million. The sweet spot will be most likely between 500,000 and 1 million, depending on the kind of finance we provide. If it's a working capital, it will be more shorter term. If it's capex, so meaning equipment, machineries, etc., then logically it will be a longer term. We can do both hard currency and local currency, although I really have to stress here that hard currency is only possible to do if our investee company, the company we provide the loan to, has access to hard currency by exporting part of their produce in dollars or USD. Otherwise, we provide a loan in local currency, and we will hedge these loans. Because of the de-risking, as mentioned before, with the first loss and the second loss by DFC, we are able to provide these loans at market competitive interest rates, which I think is also important for the longer run and the longer run stability of these companies. Finding investable or finding financing is one, but finding companies that you're able to invest in is really another thing, and takes a lot of effort, as already mentioned in the origination but I think it's very important to stress out that Cordaid has experts, has experienced people, and has these people on the ground, so we are able to move around in the networks locally and be close to our clients. And I think that's very important to stress here, because having feet on the ground is one of the key drivers, I would say, for success of the West Africa Bright Future Fund. Maybe this is a nice bridge to the next speaker, my colleague Mariam, who is based in Mali, and will talk about some investees and also the challenges they face when they are out there in the market. But before I do so, I would like to raise a question to the audience, and you can leave your answers in the chat. What is, in your opinion, what would be the challenges that entrepreneurs face on a daily basis in these countries in West Africa when they do their business? Please leave your answers in the chat, and I would like to hand it over to Mariam. Thank you.
Thank you.
Hello, everyone. My name is Mariam Nyangado. I started working with SIM a year ago as an investment manager for the West African Bird Future Fund, covering Mali, Burkina, and Guinea-Conakry. Access to finance. Entrepreneurs in West Africa faces tremendous challenges, among which we can list: access to finance, access to talent and skills, corruption, cost of doing business, inadequate education and health services, insecurity and instability, political instability, and prohibitive laws and regulations. Imagine you are running a company and you must receive some government paperwork. You know it would take ages before the process is being slowed down because of corruption. You wait for months, and then there is a coup d'etat and government changes, and you have to start all over again. And we know those challenges our investees are facing on a daily basis. And we also know that strengthening the private sector, strengthening trade can break this vicious circle. The investment in local entrepreneurs help them to overcome those challenges and gradually improve political and economic situation in fragile countries. With our trading investees, we are going to show how we address as SIM those challenges. We have chosen 3 companies operating in 3 crucial sectors for us: energy, waste, and MFI. Next slide, please. The first one is Access SA. We all know that access to electricity is a challenge for our countries. For example, in Mali, more than 50% of the population doesn't have access to electricity, especially in the rural part. Access SA is one of the largest developer and operator of mini-grids in Mali, with ambitions to increase the rate of rural electrification and energy generation from solar. They have received a loan of euro 600,000 for 2 donors projects in Mali. With this investment, more than 10,000 people had access to electricity. The investment provides surprising impact beyond our expectations. First of all, access to electricity brought security in those villages where banditry had become a real social problem. Electricity, the mayor told us when we visited one of the sites, mayor told that they couldn't spend a week without hearing bad news about attacks of villagers going to their farms early in the morning or on their way back in the evening. With the arrival of electricity, many women started income generating activities such as sale of ice and ice cream, allowing them to be more independent and take care of their children. Another phenomenon that we had seen while visiting Access's operation sites is the return of young men who had left the villages to settle in big cities. These young people return to their villages and start activities such as tailoring, carpentry, and appliance repair workshops. And most importantly, they train the youngest so that they can too work and stay in the village. The second case study is macro waste. Waste is one of the biggest issues in our countries. Unpopular with many investors, the waste management sector can be as impactful as companies as clean energy, access, and climate smart agriculture. Our partner Micro Waste has risen to the challenge of the trash crisis in Mali. Micro Waste is the first and biggest waste management company in Mali, collecting and responsibly disposing of garbage and separate recyclables. Their ambition is to be able to recycle and transform at least 80% of the waste collected. Micro waste introduced the modern disposal practice they have learned in the United States. The promoters are two Malians, Lamine Dambele and Abdoulaye Tankara, who moved to the US as students. Prior to finding micro waste, Lamine worked for 7 years with a US waste management company and learned how the business model works, how to do maintenance and collect efficiently and deal with customer management issues. As Malian, they knew the pure state of the waste sector in their country and were hugely motivated to come back and improve it with the skills picked up abroad. Despite having sustainable business model, the founders used their saving to start the project, but could not expand their capacity because banks in Mali do not offer affordable finance to SMEs, and other impact investors perceive this investment too risky. SIM stepped in, became the first international lender to the company, and that enabled them to grow. They have received two loans of euros 600,000 and 225,000 to expand their activities in Bamako and Gao by purchasing waste collection trucks, water cisterns, and incinerators. The impact of this investment is environmental, with the collection and safe disposal of waste, and social by the number of direct jobs created. In fact, micro waste offers more than 80 permanent jobs to young people. One of the most outstanding impacts is the recruitment of young people in the area where they have installed their waste depot. These recruitment enable those young men to have a secure job, which allows them to take care of their families and also to the company to be accepted by villagers. The third company is ACTB from Sierra Leone. ACTB is the abbreviation of a call to business. It is an MFI supporting micro and small entrepreneurs realize their business ambitions by lending money to them, and does a vital job of supporting the rising private sector in Sierra Leone. The population of Sierra Leone is primarily rural and young. Employment among youth is extremely high. Financial uncertainty drives young people to engage in small-scale trade, cook for sale, open a shop, repair shop. Rarely do they have enough savings or sufficient financial support from their families to start new business. Many return to financial services providers for loans. However, accessing these services is not easy for the Sierra Leoneans. For instance, only 20% of the population has a bank account, and fewer are eligible for a bank loan. Lack of finance and business training make youth business venture risky. That's when pro-social MFIs like ACTB steps in. Even in the midst of COVID-19 pandemic and Ebola crisis, ACTB continues to support women and young micro entrepreneurs in Sierra Leone. They received a loan of euro 1.2 million to support ambitions to create more employment opportunities for youth and women. Traditionally, women have been disadvantaged in access to credit and other financial services. Commercial banks often focus on men and formal businesses, but not ACTB, who targets women, female entrepreneurs especially. These three examples of SME and MFIs shows the relevance of such an impact fund for West Africa. And those challenges are not unique for our continent. We find similar challenges in other regions of Africa. Regions like East Africa could benefit from a similar fund with lessons learned from the West African Black Future Fund. Thank you very much. And now, Cordaid Investment Management Managing Director will take over.
Thank you, Mariam. this was really important to get more insights on the challenges of our investees, the challenges that they are confronted with on the ground. And I think your contribution gave good insights on the challenges that our investees encounter on a daily basis. And what it's nice to see is that your challenges that you shared are echoed by some of the contributions in the chat. So some challenges that were mentioned in the chat were working capital and limited access to finance in general, taxation, which we recognize as well, weak management, which sometimes is an issue, high cost of energy, that was mentioned, unfavorable payment terms, and the importance of sales transactions between West Africa and on the other hand, the USA or Europe. And what touches me most personally is the resilience of these entrepreneurs. So despite of all the challenges that were mentioned in the chat, that Mariam shared with us, the promoters behind Access, Micro Waste, and all the micro entrepreneurs served by ACTB, they show resilience and they can overcome these challenges. Let me first introduce myself. So I'm Han Verheijen, Managing Director of Cordaid Investment Management. And after a career in corporate finance and strategy, at the age of 30, I decided to only do things that are close to my heart. And that has resulted in 2 decades of experience in the impact investment arena. And I'm grateful to have this webinar organized together with USAID. It's really great to share our experience, but also learn from you and get your thoughts via the chat. If I look back to what Kafui told us, we have learned that the partnership between USAID, the DFC, and Cordaid boosts trade and investments into Africa. It supports job creation and self-employment, and it helps entrepreneurs overcome the COVID challenges. So we thought, let's talk about replication of the fund. We launched the fund, the West Africa Bright Future Fund, in 4 countries in West Africa, where the need is highest and which are most underserved. So Mali, Burkina Faso, Guinea, and Sierra Leone. But there are many more countries and regions in Africa that are underserved and struggle to get access to finance, especially in the SME segment, the small and medium-sized enterprise segment. So why not replicate the model to other fragile regions in Africa? And to be successful in replicating this model or invite other investment managers to launch such a fund, we envision 4 factors to be critical for success. The first one is long-term local presence. You need to understand the local context and have local networks. And Cordaid not only has local investment managers on the ground, like Mariam, but that also helps understand the context, especially because we have also private sector development experts from Cordaid Foundation in many countries in Africa. So local presence is key. Second, you need to be impact first and not finance first. You cannot make money, good money, double-digit money in these underserved countries, but you can create a lot of impact. And for example, Cordaid is traditionally the first international lender for small and medium-sized enterprises. And that is important because that creates impact. Then thirdly, to be successful, you need to be what we call inclusive. So many impact investors serve the MFI segment, the microfinance institution segment. And that is important because microfinance institutions reach out to micro entrepreneurs, for example, that quite often start a business. But the small and medium-sized enterprise segment, so the SME segment, is known as the middle, and there the need for finance is largest. So it's critical also to serve the SME segment. And fourthly, to be successful, you need to be able to de-risk the funds. in order to attract capital from third parties and in order to scale. And the larger the scale, the more impact you have. So these 4 ingredients positions Cordaid well to replicate the funds to other underserved regions in Africa, together with partners like USAID and the DFC. At least that's what we think ourselves, but let's test that with our panelists. And I would like to introduce our 3 panelists, and I'll do that in alphabetical order. Heather Bateman. Heather, good day to you. Investment Director Africa at the US International Development Finance Corporation. And Heather, I'm curious, during your career so far, you have focused on Africa and specifically West Africa. What makes this region special to you?
Thanks, Han. And first and foremost, thanks for having me here today. It's always a pleasure to join you. And I think I very much speak on behalf of DSC when I say we know we're successful when we see our clients be successful. So we're very happy to support you in the work that you do. So what makes the West Africa region special to me? As you mentioned, I've worked at DFC and focusing on the region for a few years now. I really see a lot of opportunity. It's a very unique region, I think, especially compared to even other parts of the African continent, in that it's quite diverse. It's got 2 main languages, even French and English, among many, many others. I think just knowing the huge untapped market opportunity, I think especially in the Sahel, which I know is where the West Africa Bright Future Fund is focusing, just presents a lot of opportunity for investors like yourselves, and for entities like ourselves to support you in those efforts. You know, and I think one thing I've always found to be, I guess, nice in working with you all at Cordaid Investment Management is just how honestly I think you face the region, because as you and certainly others have mentioned here, it is quite a difficult region to work in at different times. You know, 3 out of the 4 countries that the West Africa Bright Future Fund is focusing on have had coups over the past couple of years, among many other challenges. And so I think, you know, the type of work that you do to face that head on and honestly is something that I think, you know, is one of the many aspects that makes your work unique. And like I said, we're certainly always looking forward to ways that we can support that region and help to promote more economic opportunity there.
Thanks, that is good to learn, Heather. Thank you. Let me introduce the second panelist, Josephine Ragney, a social investment manager at Netri Foundation in Spain and a prospective investor in the West Africa Bright Future Fund. Welcome, Josephine.
Hi there.
Hi.
Can you see me? Because I can't see myself. So.
See you very well. So welcome. And Josephine, you started your career at BlackRock and Merrill Lynch Investment Management. I'm curious, what made you switch in your career from, let's say, the hardcore investments to the impact investing arena?
Okay. Well, Han, thanks for inviting me to this very interesting panel, first of all. And like yourself, one of the challenges I had when I was working in, you know, just traditional finance was the lack of heart and the lack of considering all the impacts of the investments. And, you know, I've now, you know, switched, well, I switched over 10 years ago. And it's really interesting to see also how the whole industry has actually evolved. And now, you know, you don't really make an investment without talking about ESG and, you know, what are the broader impacts of that investment that you're making. So, you know, I made, let's say, the switch early. I was like a pioneer, let's say, like yourself. Very happy to do it. It's, you know, the kind of weighing the impact, the risk return is, you know, multi-dimensional and needs a lot more skills than just doing pure finance, but it's incredibly rewarding.
Yeah, I recognize what you say, Josephine. Thanks, and good to have you in the panel. Let me introduce the third panelist, Larissa Cañas, my colleague and senior investment manager based in Freetown, Sierra Leone. And Larissa is responsible for the Pan-African financial institution portfolio as well as the SME portfolio in Sierra Leone. And Larissa, I'm always wondering, you were born on the Philippines. What made you decide to move to West Africa?
Thank you for having me in this panel. What made me decide to move to West Africa? You know, my background is commercial banking, largely SME finance, and I think same with Josephine. I also, you know, reached to a point in which you were looking for meaning and looking for context where your skills will be much more useful. So that made me move to West Africa.
Thanks, Larissa. What I would like to do is we have some 20 minutes for the panel, and I would like to split it in 3 parts. First, I would like to briefly reflect on the West Africa Bright Future Fund as it is. Then I would like to look forward to replicating the model and learn from the panelists. And then thirdly, and that's really important, I would like to invite the audience to raise questions via the chat. And we would like to really reserve some time to come back to your questions. So please feel invited to come in with questions in the chat. But let's first briefly reflect on the West Africa Future Fund as it is. And Heather, you already indicated a bit about it, but what makes the West Africa Bright Future Fund unique to you? And what was the reason you were supporting the fund?
Sure, yeah, I think as I was reflecting back on this and preparing for this webinar, there's a number of things that I think make this unique. You know, in my role, I see a lot of different opportunities come through, and this one, I think, hits on a number of different things that I don't necessarily see every day. So first of that, I think, is now that the structure is fully formed and together, and the West Africa Bright Future Fund is moving forward, the partnerships that are involved in really creating the fund as it is today are pretty unique. Just the number of the partnerships, the partners who are involved, 2 different agencies of the US government, yourselves, a private investment manager, other private investors coming in, the Dutch Postcode Lottery, which I know is also a big player in your first lost capital tranche. So a lot of different partners, and you don't necessarily see that every day, mostly because in my experience, it can be quite challenging and can take a lot of time to get those partners together. Everyone has different goals and objectives, so pulling that off can be a feat in and of itself. I think secondly, honestly, having a fund that focuses on the exact target, investment profiles that you're looking at is in and of itself unique. Focusing on 4 often challenging countries, and specifically SMEs in those countries, again, is not something that I see every day in the work that I do. And as I had mentioned before, I think the way that you and the entire Cordaid Investment Management team look at that work in an honest way and really face those challenges head on in the pre and post investment support that you're able to provide, I think is what helps to make that successful. Third, certainly is our role as a guarantor, we care about this quite deeply too, is that I was impressed over the course of the diligence meetings that I had with you all now, many months ago now, but really of just the high professionalism and the strong oversight you have of risk on the portfolio that you have in West Africa and certainly other places where you work. It's difficult to even just make the unit economics of that work and have that really amount of staff and oversight of staff to do that. But it's something that certainly we care quite a bit about, and I'm assuming your investors as well, as you think about how to manage the risk in working in these places. And then fourth, just really the additionality, I think, for a transaction like this, the way that you've been able to accelerate change with the West Africa Bright Future Fund, and with the first loss capital tranche that you really have that cash upfront to really start making those investments immediately has been helpful. Helping to expand the geography that you work in, and just the way that with these partnerships, we're able to bring together more private capital to a part of the world that I think really needs it, especially for SMEs. So yeah, quite a number of things as I was thinking back.
Yeah, that's very, very helpful. This is the perspective from you, representing the DFC as a provider of a credit guarantee. Let's step over to the perspective of Josephine as a prospective investor in the fund. So Josephine, what makes the fund unique to you, and what was your reason to consider supporting the fund?
Yeah, well, the Netri Foundation, invests primarily for impact. So, and particularly in improving the lives of people living in poverty. So, let's say the reach of the fund was really important for us, focusing on fragile markets, focusing on women and youth, and also, looking at other sectors beyond microfinance. We thought that the reach was really interesting. And then, it's been mentioned a lot, but the quality of Cordaid, we've worked with Cordaid a number of years on, co-investing in other markets, and, the care on the due diligence, the care on the impact analysis, we really resonate with the theory of change of this fund. So that was really compelling. And then, looking at us as an investor, we are, a foundation that invests its entire endowment in social impact investment. So, we need to manage risk and return, and we're coming into the debt tranche, which, given the blended finance structure, it really mitigates the risk of these types of markets for us. So it's very compelling.
What I like you saying is you need to manage risk and return. And in traditional investments, risk and return quite often go hand in hand. The higher the risk, the higher the return. But what I like about impact investing, and more specifically about blended finance, is that there is a third element, which is impact. So you're kind of juggling with three balls: risk, return, and impact. Larissa, could you describe these three ingredients in relation to your work for the West Africa Bright Future Fund?
Yeah, so these three ingredients of risk, return, and impact. Yeah, indeed, the focus countries of the fund brings the risk to a high level. And these are fragile contexts. And we know what it all means in terms of the macroeconomic performance of these countries, the political and security situations, the stage of financial sector development. And there are numerous weaknesses in the ecosystem for SMEs to develop in these markets. On the other hand, we see a lot of economic opportunities, and the social impact returns in these markets are potentially high. And these focus countries of the West Africa Bright Future Fund, for example, present agricultural sectors that have high potential for exports, such as fonio, shea butter, cashews, cocoa, palm oil. But aside from that, there's also a lot of room for substituting imports. And these countries are in dire need to produce goods locally to meet huge domestic demands. So, this could be the staple foods, raw materials, inputs. And so, that's on the economic opportunities that we can invest in. These countries are also expanding, the supply of renewable energy, and these countries are tapping different types of energy providers to serve the market. So on the one hand, risk, then you have the economic opportunities and social impact. And yeah, thanks to the Trade Hub, the DFC, participating in the fund, we are, able to invite other investors to join. in the fund, and hopefully we can build track record and demonstrate that there are viable transactions in these markets.
Thanks, Larissa. That was a quick look at the West Africa Future Fund, but let's look forward on replicating the model, because ultimately we would like to replicate the model in order to have more impact in other regions in Africa. Now, West Africa is really underserved, and especially the 4 countries that we are active in. But for example, in East Africa, there are many impact investors active, like, for example, in Kenya. And Josephine, I would like to ask you, what market conditions remain unaddressed, and what makes Cordaid and its proposed solution ideal to meet them? Could you reflect a bit on that?
Yeah. Well, normally when we try and focus our investments, we look at the human development indices of different countries. Mm-hmm. And it's really interesting to see, the first or the bottom 10 countries. And sorry, if someone doesn't know human development indices and how it's composed, they basically look at not only economic income of people, but they also look at lifestyle, or let's say, life expectancy, education levels, and that type of thing. So if you look at the lowest countries of the HDI index, the top 10 are all Africa, or the top bottom, sorry, are all Africa, including Sierra Leone, Burkina Faso, Mali. And then if you look at, the next, let's say, or the bottom next 20, or the mm-hmm. bottom 30, most of them are also in Africa. And a lot of these countries are, again, we've talked about it quite a bit, but have really high capital costs. So I think, Africa in general, particularly with growing populations, a lot of youth unemployment are really, perfect areas for Cordaid to focus on.
Yeah, thanks. And Cordaid has quite a, let's say, an analytic approach in defining which markets we would like to serve. And based on statistics and qualitative data, we plot countries on what you could say on 2 axes. One is the need for impact investors like us. And the other one is the probability to be successful in a specific region or country. And this is a question actually, Josephine, to you, but also to Heather. Which countries next to the 4 countries in West Africa are, to your knowledge, most underserved and could benefit from a similar fund? Heather, could we start with you?
Sure, absolutely. And I remember looking at those graphs that you and your team had put together when we were looking at the West Africa Bright Future Fund. And I thought it was a very interesting way to consider it and also consider it visually. So at DFC, we don't necessarily do that same graphical representation and thinking of where we might be working next, but just in the work that I see, as well as work from my colleagues who cover the East Africa region and other parts of Africa, I think I see a mix of, combination of underserved markets and certainly SMEs, challenging and more fragile environments where investors might not want to come in, and also a lot of demand in certainly DRC, Uganda, and Burundi for different reasons. Those are all extremely different countries for anyone who is from there or who may be working there. But I think for a variety of reasons, we really see those as potentially good places where we think there's a lot of potential for an investor like yourselves to come in and serve the same types of SMEs that you're doing in West Africa.
Yeah, thanks. Josephine, what is your perspective?
Yeah, hi, sorry. Looking at, countries in particular, let's say, looking at East Africa, again, I agree completely with Heather, Uganda, Rwanda, Tanzania as well, though sometimes it's quite challenging to invest there. I think there's a lot of companies that are doing great work in the agricultural sector, in energy access, similar sector focus that you have. Also in West Africa, there's a lot of need in even big countries like Nigeria, Again, tricky and challenging political situation, but very big population, very interesting entrepreneurs, really needing support to finance their businesses.
Yeah, thanks. Larissa, you're active, you live in Freetown, Sierra Leone, but you also manage Cordaid Investment Management's portfolio of financial institutions all over Africa. If we would replicate the model, the West Africa Bright Future model, to other parts of Africa, do you think we could use the same model, or should we, let's say, tweak it to the local situation?
I think there is a lot of merit of doing a similar approach when we combined, focus countries in the fund to invest in. We have, I think that indeed, for example, if we go to West Africa, we can combine a large country and a small country, but they are all underserved. But then I think combining is good for scale and efficiency, as well as for risk diversification.
Okay, yeah, thanks. I have an eye on the clock, and there are some questions coming in via chat, which is great. So thanks for that. There are a couple of questions asking how to reach Cordaid to access or benefit from the de-risking mechanisms we provide. Marina, could you in the chat show our contact and my contact email address so that people can reach out to us and that we can connect with those who raised this specific question. Alex Mani raised the question, what advised the size of the fund to be kept at $27 million, and is the uptake expected? And actually, I like really this question, and it reminds me of a conversation we had earlier this month with some DFIs, because the West Africa Bright Future Fund is kept at 27 million euros, or some $30 million US. But ultimately, you would like to have impact at scale. And to be able to have impact at scale, you would like not to invest 30 million, but let's say 300 million in the region. But the region simply cannot absorb such a capacity. So we need to develop private sectors in underserved countries to have investable enterprises in these areas. Heather and Josephine, do you have any experience in private sector development or an advice that you give to Cordaid or other fund managers to, let's say, to scale these regions and in the future not launch a fund of 30 million, but 100 million or 300 million even? So to really have impact at scale. Is there any advice that you could give us? Heather?
Sure, I can go first. I've seen a lot of success with different models of where an investor like yourselves partners with some kind of existing capacity service provider, whether that's a USAID funded program like the Trade Hub, or whether it's one that's kind of more long-term within the country that you're working in, that's providing consulting services, advisory services, helping to build the capacity of these SMEs. It helps that entity to know that there are investors that are interested in providing them the financing or the investment that that entity, that company would need to grow. And I think on the flip side too, it helps to provide that investor with pipeline of companies that they know are receiving support in a way that they've likely vetted and feel that they trust the level of expertise that's coming in. So I would say models like that, again, can be challenging to put together, can take time, but I have seen some success with that.
Yeah, thanks for these insights. Josephine, anything to add on private sector?
I completely echo that. And, I think pre-investment technical assistance is really valuable. And I know that you're already doing it. And then, I just wanted, given that it's a forum on blended finance, I just want to, highlight, we actually invest quite a lot into blended finance products, and the role that USAID or DFC play, and the first loss providers is so important, and it's so powerful, the catalytic effect that this has. So, you know, a good impact-driven manager plus this blended finance and first loss provision is like a superpower, I think. So thank you all for providing it.
Thanks for these kind words, Josephine. With an eye on the clock, that brings us to a final question that we received in the chat from Subaru with AEV Ventures. And they raises the question, what instruments are used by Cordaid to hedge exchange rate risk for local currency loans provided to the borrowers? And who bears these risks? Is it the lender or the borrower or both? Larissa, I'm not 100% sure. Can you give some insights on that?
Yeah, so within Cordaid Investment, we do hedge through organizations, institutions like TCX and the service provider MFX. And we do both portfolio hedging approach as well as on a per transaction basis. So indeed, it is we price the loan together with the hedging cost, and therefore this and that would in turn turn out into a pricing that is very much a benchmark to commercial market interest rates. And so the cost, the overall cost is indeed is borne by the investee. But again, we do sacrifice margins within that pricing in order really to make our financing affordable overall. So it is both. We bear the cost, both investee and us, the lender.
Thanks, Larissa. And that brings us to the end of the panel. So thank you, Heather, Josephine, and Larissa, for bringing your wisdom and experience to this webinar. And before I conclude, I would like to hand over to you, Charles.
Thank you, Han and the team for presentation and for the panel discussions. With that, we do have a lot of questions. I still see a lot of questions in there unaddressed. What we can do is have a follow-up email to them and provide the answers. I think there was one particular question with regards to the use of the guarantee. And with that, I'd like to introduce Tia, who will then provide the technical closing to the presentation. Thank you once again, Han. Oh, Han, sorry. Yeah. Would you mind providing the closing remarks? Actually, the biggest thing. My apologies.
That would be a good idea, Charles.
Yes, absolutely. Thank you.
I have three important takeaways for this webinar. One, there's definitely a market for serving entrepreneurs in most underserved countries. And traditionally, I'm always optimistic if there's a market, but in this case, it's also a painful conclusion, because there are simply too many underserved enterprises that don't have access to finance in Africa. So that is one. The second takeaway is that in order to have impact at large, we need to develop private sectors, like Heather and also Josephine indicated. Otherwise, the absorption capacity might be too limited. And a second West Africa Bright Future Fund will still be 30 million, and we want to have impact at large. And a third takeaway, which came through in the whole webinar, is that working with partners creates value. So we value the partnership with USAID, the TradeUp, the DFC, and also all the investors. And I think only by bringing these partners together, we can have impact at scale. I would like to thank USAID for co-organizing this webinar. It really feels like a partnership, actually, and we hope we can build further on this strong foundation. I would like to thank also the speakers and my colleagues, the panelists, for sharing their wisdom and insight. And I want to conclude on a personal note. We called our fund the West Africa Bright Future Fund, and that is with a reason. West Africa is logical. The fund serves this region. But the second part of our fund's name is critical, the Bright Future Fund. And we chose that with a reason. Because I believe, and Cordaid believes, that every human being on Earth is entitled to a bright future. And we are determined, together with our partners, to work towards this aspiration. So thanks again for joining the webinar. And on behalf of USAID and Cordaid Investment Management and the contributors to this webinar, I wish you a bright day and a bright future. Thank you.
Wow, thank you so much, Han, and all of the presenters and everyone who was able to join us. I'm hearing a huge round of applause virtually, and thank you again for encouraging us in the bright future that our region here in West Africa is looking forward to because of the hard work that you all do and through our partnerships. So thank you again. Again, my name is Tia with the West Africa Trade and Investment Hub. Just a few things. We noticed there were some huge technical issues that were keeping people from coming back or joining the webinar after a certain point. So please reach out to your contacts and let them know that we will be sending a follow-up email with the recording, as well as hopefully continuing to have such engaging dialogue and discussions and opportunities for us all to gather together and learn and consider how we can be a part of creating this bright future. We put in the chat the email that you can use to reach out to us with any further questions, as well as our website, www.westafricatih.com. And we look forward to connecting with you again soon in the future. Thank you again for joining us, and please take care. Enjoy your bright day and bright future. We'll see you. Thank you. Bye.
Bye-bye.